Most remote workers mistake digital nomad visas for tax-free, guilt-free arrangements. This couldn't be farther from the truth. Stay long enough on a remote work permit and you trip into accidental tax residency and potential double taxation. Your foreign salary, once taxed only in your home country, suddenly has a second tax bill attached. But these 15 nomad visas sidestep that trap through one of 4 mechanisms. IMI has done the research of separating the ones that keep your income tax-free from the ones that only look like it. Now, let's start with the 183-day rule that you may already know. Most tax authorities use one test to decide whether you owe them money. Did you spend 183 days or more in the country during the tax year or in the last 365 days? Cross that line and you're typically a tax resident. Your worldwide income becomes fair game to the local revenue service. Standard digital nomad visas don't typically exempt you from this rule. The permit lets you live there legally. It does not exempt you from residency-based taxation. This first group of countries with digital nomad visa programs don't levy personal income tax at all. Whether you become a tax resident there is irrelevant because no individual is taxed on employment income regardless of how long they stay. The UAE Virtual Working Program is one of the most popular in this category. Applicants need a minimum monthly salary of $3,500, proof of an employment contract, and private health insurance. The UAE imposes no federal or emirate-level personal income tax on salaries, dividends, capital gains, or investment income. And these on-the-ground experts confirm there are no plans to introduce one. Family inclusion is permitted. The Caribbean island of Anguilla operates a work remotely program that grants a 1-year permit for a $2,000 application fee plus dependent fees. Anguilla levies no income, capital gains, inheritance or corporate tax outside specific banking and insurance sectors, and it takes just 1 or 2 weeks to get approval. The visa doesn't renew, but Anguilla also has a separate high-value resident track for applicants who want formal tax residency through a $75,000 annual lump sum payment. Fellow Caribbean island, Antigua and Barbuda, also offers a nomad digital residence in a unique format. The visa runs 2 years, but on a lifetime basis, meaning applicants cannot apply a second time once the permit expires. Required annual income is $50,000. The country eliminated its personal income tax in April 2016, so residents and non-residents alike pay 0 on local or foreign personal income tax. The next 6 programs are in countries that would otherwise tax your resident income, but the visa legislation explicitly carves out foreign source remote work earnings. Croatia's digital nomad visa, introduced in January 2021, grants a statutory exemption on foreign source income for the duration of the permit under Article 9(1)(26) of the Croatian Personal Income Tax Act. A 2025 amendment extended the maximum stay from 12 to 18 months, as long as you can prove the minimum monthly income of about €3,750, calculated as 2.5 times Croatia's average net salary. You're in. Just don't earn Croatian source income during your stay. Costa Rica's digital nomad law, known formally as Law 10008, exempts visa holders from local income tax on foreign source earnings. The law also waives import duties on personal computers and work equipment and authorizes holders to open Costa Rican bank accounts and use their home country's driver's licenses. The income threshold starts at $3,000 monthly, rising to $4,000 if applying with dependents. It runs 1 year and is renewable for a second year. The Barbados Welcome Stamp, created by the Remote Employment Act of 2020, is one of the clearest purpose-built tax carve-outs in the Caribbean. Welcome Stamp holders are treated as non-residents for income tax purposes, regardless of how long they stay, which prevents the 183-day rule from activating. The portal lists a $50,000 income threshold, though the underlying act references $100,000. So confirm the current operational figure with the Barbados authorities at application time. Fees are $2,000 for a single applicant and $3,000 for a family. Just like in Croatia, local employment or income voids the tax exemption entirely. Dominica's Work in Nature visa runs 18 months and is not renewable. The program's official site lists a formal income tax waiver for foreign source earnings, and the fee page confirms that capital gains and dividend taxes also don't apply. Minimum income is $50,000 per year. Dominica otherwise taxes residents on worldwide income at rates up to 35%, so the waiver is what keeps remote workers outside that net. Montserrat's remote workers stamp is the highest threshold Caribbean option on this list. Visa holders aren't liable for Montserrat income tax during the stay, though the minimum annual income is $70,000. Montserrat has fewer than 6,000 residents, and broadband tops out around 20 megabits in much of the island. Montserrat is one of the lesser-known, lowest-density Caribbean nomad options available. Curaçao's At Home in Curaçao program runs 6 months, renewable once for a combined 12-month stay. Visa holders aren't classified as Curaçao tax residents during the permit period and aren't subject to local income tax on foreign earnings, provided they avoid local employment. No minimum income requirement applies, although applicants need proof of funds, health insurance, and remote work arrangements with foreign entities, the usual. These programs' rules are moving targets. Countries tighten, loosen, and replace these exemptions with no warning. If you want to know the moment a program changes its thresholds, adds new requirements, or closes entirely, subscribe to the IMI Daily newsletter on the website. We don't miss a thing. The next 5 countries tax only locally sourced income. Foreign salaries and freelance revenue from foreign clients fall outside the local government's tax net regardless of how long you stay. Becoming a formal tax resident carries no cost on remote work earnings because the tax base never extended to that income in the first place. Panama introduced its short-stay visa for remote workers through Executive Decree 198 in May 2021. The program runs 9 months and can be extended once for a total of 18 months. Minimum annual income is $36,000 from foreign sources. A small, unique quirk, Panamanian immigration law requires applications to be filed through a licensed local attorney. The visa is for individuals only, so typically families use the Friendly Nations visa, Qualified Investor visa, or another track. Uruguay's digital nomad permit runs 180 days and is renewable once for a combined 12 months. Tax residency in Uruguay triggers only if you spend more than 183 days in a calendar year. Establish your center of vital interest there or make a qualifying investment. Foreign employment income is exempt from Uruguayan tax for residents as well, under Uruguay's territorial treatment of wages and salaries. For nomads whose income is mostly employment-based, Uruguay imposes nothing. But if you plan on remaining in Uruguay for a substantial amount of time, read carefully about the modifications to Uruguay's tax scheme IMI covered in a recent article on the website. Things have changed. Malaysia's DE Rantau Nomad Pass leans on the country's territorial tax system, and Budget 2025 extended Malaysia's foreign-sourced income exemption for individuals through 2036. Pass holders working remotely for non-Malaysian employers are not taxed on that income, but one condition applies. The exemption is formally contingent on the income having been subject to tax in its country of origin. Most remote workers paid through foreign payroll meet this automatically, but if you want to be certain before going through the process, the income requirement is $24,000 per year, and the pass runs 3 to 12 months plus a renewal for up to 24 months. It's valid for Peninsular Malaysia only. Now, how about an idyllic African destination? Seychelles operates a territorial tax system and has no capital gains or inheritance taxes, confirmed by the Seychelles Revenue Commission. With no formal minimum income requirement, the Workation Retreat Visitor Permit runs up to 1 year, with a possible 6-month extension. Mauritius takes a slightly different route. 1-year premium visa holders aren't taxed on foreign earnings for the first 183 days. Past that threshold, holders become tax residents but are taxed on a remittance basis. Foreign source income is only subject to Mauritian tax if and when it's brought into a Mauritian bank account. Spending via foreign credit or debit cards doesn't constitute a remittance, a position confirmed in the Dilu Supreme Court case. Now let's talk about Japan, as it probably has the most unique framework in this video. Rather than exempting income or running a territorial system, Japan simply caps the visa at 6 months, which is too short to trigger tax residency under Japanese law. Launched in 2024 under the Designated Activities category, the program is explicitly non-renewable. Applicants must leave Japan for at least 6 consecutive months before reapplying. Japanese tax residency requires continuous presence of 1 year or more, or establishment of domicile in the country. Visa holders can't meet either test inside the 6-month window, which means foreign source remote work income is not taxed in Japan while on their digital nomad visa. The income requirement is 10 million yen annually, roughly $65,000, making it the highest threshold on this list. Applicants also need citizenship from one of 49 eligible countries with existing visa waiver and tax treaty agreements with Japan. Japan is a short stay by design, not a base. So what's true is that none of these 15 programs resolves your home country obligations. American residents and citizens file worldwide no matter where they live or earn. Europeans, Canadians and Australians may retain residual tax obligations until they formally exit their domestic tax system. The visa only controls your exposure in the host country. Exiting your domestic tax system is a separate question that depends on your citizenship, your domicile, and the tax treaties between the two jurisdictions. Before committing to any of these programs, verify your position with a qualified cross-border tax advisor you can find at imidaily.com/imiprofessionals. Now, the digital nomad visas in this video buy you a runaway of only 6 to 24 months. For a permanent move, you want tax residency in a jurisdiction that doesn't touch your foreign income in the first place. We covered all 29 countries globally that fit that description in the video on your screen. Subscribe if you want more on tax residency, second citizenship, and global mobility.